Welcome to the Kaiser Report. I'm Max Kaiser. Euripides once said, "No fiat currency can confidently say that it will be living tomorrow." I paraphrase, of course. Euripides, Stacy, what's this all about?
Well, Max, the U.S. dollar may be shuffling off this mortal coil if the J.P. Morgan chart here, titled "Your Reserve Currency Status Does Not Last Forever," starting from 1400, we had the Portugal as a reserve currency, then Spain, Netherlands, France, Britain, and now the U.S. The U.S. has outlasted the Netherlands so far and is about the equal to Portugal.
Wow. Okay, so the U.S. dollar is ready to bite the dust, is that what you're saying?
If history is prologue, if it is able to predict anything, of course, in investment terms, they always say that past never can predict the future, so we don't know, but it is ready for a big earthquake.
Okay, so, well, we've been saying this for years, and so J.P. Morgan agrees. So J.P. Morgan is finally waking up. Did they watch our show? Is that it?
Well, I don't know if they're predicting it, but they're just saying it is at about, it's a very ripe currency. So this chart, however, featured heavily in quite a few analysis about this latest story. 40 central banks are betting this will be the next reserve currency. At least 40 central banks have invested in the yuan, and several others are preparing to do so, putting the mainland currency on the path to reserve status even before full convertibility. This is Standard Chartered, and the yuan is obviously the currency of China. And they're saying the fact that despite it not being convertible, all of these central banks around the world, at least 40, stocking up on reserves of it, makes it a de facto reserve currency.
Right. Well, I understand why central banks would be stocking up on the yuan, because now you've got this whole new trading zone, Eurasia trading zone, which is China, Russia, Iran, and they're going to be pricing oil in this new, basket of currencies. So people, these countries obviously need oil to fuel their economy. So it makes prudent sense to stock up on yuan.
Well, of course, people could be looking at that J.P. Morgan chart, looking at history and saying, well, the U.S. dollar is about ready to go bye-bye, so let's position ourselves for the possible future. But not quite yet. The U.S. dollar is still the world's most widely held reserve currency, accounting for nearly 33% of global foreign exchange holdings at the end of last year, according to IMF data. That ratio has been declining since 2000, when 55% of the world's reserves were denominated in U.S. dollars. So the trend is not the dollar's friend.
Yeah, it's like when you have shampoo, and as you get down halfway through the shampoo bottle, or a quarter, 3/4, you put water in there to try to stretch it out. Now, the U.S. dollar has been world reserve currency for decades, but it is losing its efficacy to cleanse the world's global banking system through the money laundering or a shampoo job. So they keep adding more kind of quantitative easing or other accounting tricks to kind of keep it going. But it's being hollowed out, isn't it? It's not really fit for purpose.
Well, at the moment, it's an exorbitant privilege, as Charles de Gaulle's government called it, that it's an exorbitant privilege to be able to print money and just get goods and services from around the world sent to you pretty much for free. So that on that one hand, in the real world, in the real economy, and with real GDP and real global trade, it could end up hurting the U.S. However, there's another angle to the story where Eve Smith at nakedcapitalism.com, she looks at the same data about the central banks around the world, the 40 of them that we know of at least, stocking up on yuan. And she disagrees with the likes of, say, Zero Hedge, who think it's very important and a signal of the end of the dollar, because she says reserve currency is the yuan tearing down the U.S. dollar. Well, she says there is a quantum difference between central banks holding a few of your pennies and global markets pricing absolutely everything in relative terms off your currency. The U.S. dollar still makes up one side of 90% of the world's $700 trillion in over-the-counter forex, equity, commodity, interest rate, and credit derivative transactions, making the yuan and everything else almost completely irrelevant.
Mm-hmm. Well, it's like one of those Russian dolls, isn't it? When you open it up and there's another doll, and then you open it up again, it's another doll, and you keep going, and it's all dollars, dollars, dollars. Yes, well, she makes a good point. All of the $700 trillion or so in global derivatives market is priced in dollars. So the subset of various currencies would be less important according to Eve Smith. But I disagree with Eve Smith because she is not taking on board the trend of the economy moving from paper to assets. So if we move to assets, as we are with the oil pipelines coming into play now in this Eurasian trading zone, then paper will be revealed as not really having much value at all. And so therefore, we're going to see more pricing of trade in hard commodities like oil, like gas, like gold. And that's what China, Russia, Iran are getting ready to do right now. The Shanghai Cooperation Organization is all about that. And they're getting ready to throw down in a big way. So I have to disagree with Eve. I think Eve's being fooled by the nominal value of the big number.
However, in the real world as well, okay, you have a 70 trillion at most dollar economy. It produces 70 trillion in global goods and services every year. So the U.S. effectively, they own 10 times that, the next 10 years of growth that has to be sent essentially back to the U.S. And you saw this during the collapse of 2008. Here we have Europe, where people work for a living. They're at more than just the manufacturing jobs of flipping burgers. So people actually have wealth-creating jobs. Look at Germany, look at France. Everybody has jobs. They make things. They have lifestyles, houses. They have no mortgage on it. They have retirement benefits. They have all these things. They create wealth and goods and services. And yet they suffered far more than the U.S. because what happened? A lot of the derivatives blew up. A lot of the derivatives, and what happened, the European banks, the European economies had to convert their euros into dollars and send them in to close off these trades with J.P. Morgan and all the U.S. banks which hold these U.S. dollar-based derivatives.
That's absolutely right. And that's why as the U.S. market for derivatives continues to collapse, you're going to see more countries moving toward asset-based exchange and currency swaps based on currencies that have a tie to resources like oil and gas. Remember, in 1971, the world went on the petrodollar when America defaulted on its bonds. And this has been going on for 40 years. And now we're at a new juncture where the U.S. is defaulting on all of the quantitative easing that they put out there. So now we're going to go for essentially the second stage of the petrodollar, except it won't be oil for dollars, it'll be oil for rubles, oil for Chinese yuan. It'll be the petro yuan. The petro yuan is coming to replace the petrodollar. That's what I'm saying. That's why Eve Smith is wrong. She doesn't understand the petro yuan.
Yes, well, okay, but I still reckon those contracts, those financialized contracts, one day have to be either declared odious debt, fraudulent debts, and therefore...
Okay, so take that scenario for a second. Number one, who goes out of business? J.P. Morgan. They've got 90 trillion in fake derivative nonsense that they share with the Federal Reserve. Federal Reserve goes bankrupt. They're leveraged at 90 to 1. Who else? Bank of America, Citibank, all those UK banks, HSBC, Barclays, Lloyds, they're all hugely leveraged with this paper nonsense. They all go bust. Do the people still need to buy gas? Do the people need to buy oil? Why do you think Russia is sitting there just like nodding their head like this, like, you know, bring it on. We've got the gas. You've got paper, you idiots.
So let's look at other signs out there on the headlines that, in fact, the U.S. dollar might be at the end of its reserve status as J.P. Morgan looks back to 1400 and every single empire seems mighty and indestructible, and yet their empires collapse and their dollars collapse. Gazprom's oil arm considers moving away from dollar-based contracts in response to U.S. sanctions.
What did I just say?
On Russia.
It's Gazprom. They're moving away from the dollar. Gazprom is so huge. They're like the frickin' giant of oil companies.
Gazprom Neft, the oil arm of Russia's Gazprom, is the one considering doing this. The company is the first in Russia's oil sector to say it could potentially move away from dollar-based contracts in response to Western sanctions, and marks the planning going on in Russian industry to anticipate possible further measures. So the CEO says no such task has been set by the government, but we have discussed with our buyers the possibility of switching contracts to euros, and 95% said they are ready. So, of course, this is another way to destroy the derivatives, those $700 trillion in U.S.-denominated derivatives, because if the underlying contract is now based in euros or yuan or ruble, then of course there's a risk for the JP Morgan holding those derivatives, which is the underlying contract is in another currency.
Well, you know, JP Morgan recently cut off Russia from like a $5,000 money transfer, and they started to create, warlike situation on top of the additional financial warlike boycotts and interferences that JP Morgan's been involved with. So JP Morgan has effectively declared war on Russia. And here you have the CEO of Gazprom saying we might start pricing out of dollars. If you don't understand the subtext of what this gentleman is saying, you're about to have a very, very cold winter.
But again, like the signs of the end are when the entire system, the fabric that they control, the U.S. controls the financialized world, and therefore the derivatives, the hundreds of trillions of dollars of derivatives and debt upon which the
Here's my belly button lint. According to Eve Smith, this is worth $30 billion. Look, I collateralized my belly button lint for $30 billion. That's right there on JP Morgan's balance sheet. It must be true. They're loaning against it according to the Basel III agreement. This fulfills our minimum capital requirements. It's not belly button lint, it's $30 billion in assets. These are tier 1 assets, buddy. What do you mean gas and oil? Nobody wants that stuff.
So as part of measures to try to increase the economy's independence from international forces, Russia has speeded up the development of a domestic payment system and has urged companies to increase the share of ruble payments and contracts with foreign partners. So they're developing new systems that are outside. Forget the derivatives, okay? They're gone. How about the credit cards, the whole financial system, SWIFT, the transfer of money from point A to point B? Once you start using that as a weapon, then of course they're going to come up with their own alternative weapons.
Duh! Of course they're going to come up with their own alternative credit card systems and SWIFT systems and money transfer systems. Of course they're going to do China, Russia, Iran, the Shanghai Cooperative Organization, look it up, get educated. I mean, this is the nexus of power going forward against the paper derivative nonsense that encompasses the UK, the US, and their allies.
So, and finally, of course, one thing that is another sign that this is the end of this empire is not only do you have the students here, the numbers just came out that students here, 73% of college students, university students, will still be in debt in their 50s. They'll still be paying their student debts there. But over in China, a tweet from Yanis Varoufakis says China invested $5 trillion in 2013, more than the U.S. and Europe combined, a datum to concentrate the mine. So they're investing for the future. The U.S., the West, are not investing for the future. In fact, they're more bombing and getting rid of all the evidence of their own empires.
Good point. Stacey, thanks so much.
Thank you, Max.
All right, stay tuned for the second half. A whole lot more.